Hello, good morning everyone. I am Divya from Relativity. First of all, thank you so much to everyone for joining us for today's webinar. I know you don't need a brief introduction about relativity because you are already our valuable clients. But I want to give a short note on this client only webinar session. We have initiated this session, which is highly curated to help our clients with latest updates, amendments, and readiness for the upcoming months. So I request you to attend all the upcoming sessions without fail. So this session is happen. This session is going to happen every month, but dates will be shared with you later. So kindly make use of this session. Now I would like to introduce our presenter for today, a well-known person, Mrs. Padma Jyoti. She has been with us for 15 years now, specializing in payroll and taxation at Relativity. She's handling more than 75 plus clients and has done 50 plus webinars so far. So without any delay, we will start the session now. PJ, the stage is yours. Thank you.
Thank you, Divya, for your introduction. Good morning, everyone. I'm very glad to welcome you all for this Open Connect session for exclusively for our clients. This is our first session, as Divya mentioned. We are going to continue. We are going to have these kind of sessions in the upcoming months. Every month, we are going to conduct a session. The major objective to conduct these kind of session is to give an update to all our clients about the all payroll and taxations, and we also want to share about the basic best practices which have been followed in the industry. These The dates for these kind of sessions will be shared by our team members to you. Keep eye on it. Every month it will be conducted. The days will be announced later. So I would request everyone to join these kind of sessions and in the upcoming months also. And we are very happy to have this session for our clients, and this is a very first session. I am welcoming you all for 1 second for this session. So today we are going to see about the latest updates which has been which has been provided in the ECR and the TDS, and also we are going to look for the readiness for the year-end activities. So here we are going to discuss about the what are the major items that we have to look into it. And today's agenda is, first thing we will check on the updates on TDS, and second thing we will go for the readiness on year-end activities. What and all things that we have to keep eye on it and how we have to proceed. And third one is the updates on the ECR generations. So after these three things, we will have a Q&A session specifically. So in that, I would request you to unmute, to raise your hands so that our team will unmute yourself so that you can ask your question. So we will have an interaction. I will address your hand. I will address your queries already. So the first thing is updates on a TDS. Most of the people would aware there is a timeline have been provided for correction filing. Until the last previous year, there is no timelines, there is no restrictions. We can even file a correction returns with respect to TDS after 6 or 7 years. Even for 7, 8 and all, we have done it. But as per the new Income Tax Act, which will be effective from the 1st April 2026, there has been a restrictions have been provided. The restriction is from the filing of the financial year. For example, financial year 23-24 Q1, I will file it on 31st July 2023. So this is the due date. When I have filed from that financial year, I can do a correction until the next 2 years. So there is a timeline has been provided. So whatever corrections has to be completed, we have to complete within the 2 financial years in the subsequent years. After that, there is no corrections will be accepted by the traces, and we also not able to adjust any kind of a thing. So this is the timeline that we are having. So what actions that we have to undertake right now is, I would request you all to close. If you have any open demands until Q3 FY 23-24, close all the demands before the month of March itself. So since there is a restrictions, most of the in the industry, most of the people will do a corrections and they will undertake certain, the load will be higher in the month of March. So I would request you to close all the open demands before February itself, so that in case if there are any revised demands has been raised, then you can undertake the necessary corrections. After after in the from April onwards, if there are any open demands which is available until Q3 FY 23-24, we are not able to undertake any corrections also, and the department may ask us to make the payment, and they want to adjust with the unconsumed challans whichever that we are having. And the second action which which we have to undertake is, before March month, download all the files and certificates for your reference. If you are already having, that is a good. But still, if you don't have any files in your hand, please download and keep it for your reference, for the future references. So this is with respect to the correction filing timeline, and this will be continued for every financial year. For example, whatever filings that we are undertaking in FY 25-26, we can do the correction until 26-27 only. So after that, we can't able to do any corrections. So this 2 years restrictions will be continued in the upcoming years also. So what we have to do is, we have to close all the corrections or demands in the same financial year. And the next thing is, for inoperative PAN, most of the people we would aware that we have to deduct the tax at the higher rate, whether irrespective of their slab, we have to deduct the tax at the rate of 20%. So there are certain relief has been provided by the department. That is, if the transactions have been made between 1st April to 31st July, the short deduction demand will not be raised to the any deductors if the PAN has become operative on or before 30th September 2025. If any of your vendor have made their PAN numbers operative before 30th September, if still you are in your traces logging, if still you are having a demand, means kindly raise a resolution with the necessary screenshot, then the demand will get be nullified. So there is no need of additional amount that has to be paid, and the no deduction, no penalty or interest also will be raised. So what happened for the transactions after 1st August is, they have department have provided the 2 months as a timeline. For example, if I am making any transactions in the month of November, and I have identified that the PAN number is inoperative. So what I can do is, I can reach out to my vendor, and if they make the PAN as operative before January month, then there will not be any demand will be raised. So there is a 2 month of restrictions has been provided. So once you make a payment, please ensure whether the PAN is, if the PAN is inoperative, kindly ask your vendor to make the PAN as become an operative. So this will not cover under the any demand for short deduction. So whatever that they have vendor is doing, that just collect the details of records, and we have to raise a resolution in the traces, and it will be closed accordingly. So these are the two major updates which has been released in this financial year with respect to the taxes. And next we will go for the readiness for the year-end activities. So as you are everyone aware, now we are in the month of now we are in the mid of the November. From the January month, we have to collect the proofs from the employees, and we have to verify, and we have to recalculate the taxes, and it has to be adjusted. So there are certain major items that we have to look on, that we have to have a control over the year. So that for that, what and all items that I have to do now. So what we have to do is, first thing is the taxability of pay components. This check that we have to do in every financial year, either in the month of, if we are doing it in the month of November, then that would be great, because we are having a 4 months in the subsequent, then we can adjust the tax liability accordingly. So first check the taxability of pay components. If it has to be fully taxable, ensure that has been taxed or not. If it is a exempted component, provide the exemption for that. Kindly check the pay components taxability once again in the month of November. That would be very grateful for you. And second thing is, anyway, most of the organizations and companies have been considering the proof from the month of January itself. So before January, we have to do certain things in the month of November. So what are the items that we have to do is, first thing, what is the guidelines that we have to prepare for the investment proof submission. So we have to tell what are the sections is available, and what is the proof that we have to, which will be accepted, what and all will not be accepted. Like that, one guidelines has to be prepared, and please ensure these guidelines has already been aligned with the income tax department circulars and notifications. If it has been aligned, then there will not be any issues. So this guidelines has to be prepared and get it aligned with the department. And for all employees, give a 15 days advance notice that we will open this window in this period, so that they will be well aware of it and they can collect all the proofs and kept it in their hand. So there will not be any last minute surprises. If anybody is going on a long weekend, then a long leave and all, they can be able to prepare it. So whatever it is, communicate to our employees well in advance about the investment proof collection activity and when the tool will be open. And the third major important thing is, have a frequent session, have a session with an employees, how about the benefits that they can get it under old regime and new tax regime, and what are the proofs is required. So this session will help us employees detailing about the what is available or not, what are the exemptions is applicable as per the Income Tax Act. So it would be very helpful for them to submit the proofs, and also it would be very helpful for us to understand the queries of the employees, so that we can prepare necessary supporting materials for that. So have these kind of sessions. So what we would request is, what practice that we will follow is, before opening the tool, we will provide a session to all our clients to whom we are processing the payroll. In that, we will tell them what and all exemptions that is available and how they have to submit in the proof, and what is the process. So once it is submitted, when the how the proof will be accepted, how it will be reflected in the tool, and if there are any rejections happened, how they have to submit the revised documents. So these kind of things, if we educate to an employees, then the queries will be reduced. So once the queries is getting reduced, then we can have a uh, better transparency and better process will be there. So it would be very useful, easy for them. So this is one session that we will conduct in start of before starting while starting the investment proof submissions. And the second thing is, we will release the mock TCR. Mock TCR means, we will what we have to do is, based on the proof submitted by the employees, we have to calculate the taxes and release it for the employee, release it to an employee, so that employee will know what is the tax which will be deducted in the month of January. They will have an overview of it. So this report will help an employee to understand, check whether there is an additional gap that I am having. I can submit any other documents like that. So if we are using a mock TCR also, it will help employees to replan it again. If they have any additional documents, they will submit to you. Actually, for this year, what we have planned is, to all our payroll clients, you will get a communication from our team regarding the investment proof collection, investment proof submission window opening in the fourth week of November, when the tool will be open and when it will be closed. And actually, we have planned to open the tool in mid of December. That is between second and third week. From the second week, the tool will be available for all employees to submit their proofs. So this is the plan that we have made. And help desk sessions and how we are going to, when help desk sessions and all will be communicated by the concerned SPOC to you, especially with the specific dates and other things. And with respect to mock TCR release, we have, as like the last year, we have planned to release before the Pongal holidays, that is second week of January. So when we are releasing the mock TCR, and if any queries that we have received until 20th or 20th of January will be considered for that particular employee, that particular month. And the queries which we are receiving after that will be considered subsequently in the next month. Some of the next payroll it will be considered. So this detailing things, you will get it from us, how the activity will be conducted in last week of November. And third thing for the year-end activity is, if you are having a multiple entity, kindly ensure the inter-entity tax computation has been calculated appropriately. If there are any employees are like that, please consider both the entities' income and calculate for the tax. And for the rejoinees also, we have to consider it. If there are any rejoinees are applicable, the tax computation has to be uh, calculated consolidating all the incomes. So if in the previous ID, if I have provided any incomes, and the same has to be consolidated here also. So these things has to be we have to prepare with the data. If there are any transfers are there, any journeys are there, so these kind of things that we have to be have a very eye on it. And next thing is the valuation of non-monetary benefits. In non-monetary benefits, as you are aware, there are so many items are there, but these three items that we have to especially check in the year end, that is, one is the interest free or concession loan. If you are providing any loan, interest free loans or reduced rate of interest, that if you are providing any loan, then we have to calculate the perquisites. This has to be calculated based upon the SBI lending rates, which is already has been released by SBI and it is available in their websites. Please take up the interest and calculate it and consider it for the perquisite. So for whomever that there is a loan balance payment which is applicable in the year of FY 2025-26, for everyone the loan will be calculated. Even if there is a opening, for example, if the loan has been closed in the month of April 25 also, the interest will be calculated, because in the starting of the month there is a opening balance, right? So the interest will be applicable for the first 30 days. So for every employee whom we have paid loan, the interest will be has to be considered. And if you are approving any set of loans in the month of March, then the closing balance, then the principal will be opened, right? So for those employees also, this has to be calculated. So please make a note of it. And the next thing is the employee contribution towards the retirement benefit if it is more than 7.5 lakhs. This retirement benefits will cover NPS, PF, and superannuation. If your organization have provided both all the three benefits, mean please put club together. And if it is more than 7.5 lakhs means, then we have to calculate as a taxable under the perquisite, and we have to deduct the taxes appropriately. For this, many times we are receiving queries from the employees why it is applicable. It's not been intimated to us earlier. It has been in the year, and if they are getting more taxes deducted, right? That time we are receiving these kind of queries. So I would request you people to prepare a list, to have a list of employees who are all having a retirement benefit more than 7.5 lakhs. And please reach out to them early and tell them this is what is the law and this is we are going to consider in the month of March. And the taxes will be deducted appropriately. Provide earlier intimation to them so that we can avoid the last minute. The employee can avoid the last minute surprises, and it would be very helpful for them actually. And the next one is the annual accumulation for the excess contribution made by the employer towards retirement benefits. So if the retirement benefits more than 7.5 lakhs, for example, if a company is contributing 10 lakhs as a retirement benefit for one particular employee means, this 2.5 excess of 7.5, that is 2.5 lakhs, will be considered as a taxable, as a perquisite. And from this 2.5 lakhs, the interest whatever that the employee is getting earned, that is also will be considered for the taxation purpose. But for this calculation, how we have to derive the interest, income tax department have provided detailed explanation. We have to consider the principal contributions, and we require the opening balance of that fund and the closing balance of the fund. So we have to get the opening balance on 1st April 2025 and the closing balance as on 31st March 2026. So this activity will be undertaken only the financial year is completed. So it will be taken in the month of April. So please collect those passbook. For PF, we will collect the passbook from the employee, and for NPS, we have to get the statements from the employee, and superannuation also we have to collect the statements from the employees. So please give an awareness to an employee that these documents are required in the month of April, and also tell them about the why it is important. If there is a delay, there will be interest payment. For example, March month we can make a payment and the TDS payment will be made until 30th. So there will not be any interest or late penalties will be calculated. If we are getting a documents delay from the employee and if we are not able to make the TDS payment within the April means, then there will be additional interest will be calculated on that. So explain to an employee and tell them and provide an awareness to them why is it required, and we require the data in the month of April first week itself, so that we can make the calculations and the perquisites will be calculated and it has to be taxed. and the value will be recovered from the employee, and we have to pay it to the department. So this activity will be taken care in most of the organization. It will be taken care in the month of April. So I would request to provide awareness to all employees to whom and all there is a retirement benefit is more than 7.5 lakhs. So these are the readiness that we have to currently undertaken in the month of November. There are multiple activities that we have to taken for we have to prepare for the year-end activities. But right now, these are the major items that we have to pitch in it. So that is one I have been highlighted. And next thing is which is respect to the latest updates in ECR generations. So in the last month in the PF portal, most of the clients would have there are so many restrictions have been provided with respect to the ECR generations. The first thing is a single challan at a time for a month. Earlier, for a same month, we can create a multiple challan, but now that is not the case. We can able to create one challan at a time. After making the payment of the current challan only, the next challan will be created. So in some companies, we are aware there are separate processes will be followed. For example, for normal employees, they will pay it under single challan, and for IW employees, they will make another challan to make a payment. So, if that is the case, please have a timeline gap so that in case if the PF website is not working, we can make a payment within the due date. So, this is a major update have been provided in the last month. And the next one is a PF contribution requirements. So earlier and all, what we can able to generate the ECR. Even for example, employer contribution might be at 12 percentage of basic, and employee can contribute at the 1,800. They can restrict it. But what has happened from the last month is both employer and employee PF contribution must be equal. If both this if the contributions are different, means we are getting an error and the ECR is not generating. The system is not allowing us to generate the ECRs. So we have to ensure if employer is contributing 12 percentage of basic wages, then employer also has to do the same. So there is no difference that employer can do it at 12% and employee can restrict it. Both the contributions must be equal, and VPF is separate. Here I am just mentioning about the base PF contributions. So both the contribution, either it should be 12 percentage of basic wages, or it should be capped at 1,800 per month based upon the new wage series. So and also we are expecting some few more updates in the future. There may be a restrictions which can be provided. So we want to highlight to all clients that please ensure these contributions must be equal for all the employees. If it is different, then we have to recheck it, and we have to ensure PF from the employer and employee should be. So this is all about the today's session. And next thing is I'm going to there is our add-on services. We are providing our add-on services on POSH compliance. Under POSH, what we are doing is what are all activities that we are undertaking is we will do a cheat box registrations, the external committees and filings and all we will undertake. And under the Apprenticeship Act, we will take care of the compliances which comes under the NAPS and NATS, and shops and establishments and CLRA also. We will take out all the filings and the register maintenance that will be undertaken by us. And for compliance specifically, we are having a tool which is a smart operator. Uh, that is an additional service that we'll provide to all our clients. And the next one is a salary restructuring. So salary restructuring, if you want to make your salary has to be restructured with respect to the industry standards or something like that, please reach out to us. We will help you on that. And HR consultation and audits. And the final thing is DPDP advisory. This is Digital Protection and Data Privacy Act, which has been proposed in the department, but it's not been enforced. But in the future, it will be anytime it will be get implemented. If you need any advisory on that also, we are willing to help you. And the next one is a Q&A session. If you have any questions, please raise your hands so that our team will unmute and you can able to ask your questions actually. If you have any questions, please raise your hands. And generally, we would receive some questions with respect to the investment proof verification and submission. So from that, I will take it out to one or two questions. The first question would be major times that we are receiving is HRA and the self-occupied property. If it is in the same city, can we provide the both the exemptions? Whether I can provide both HRA exemption and the self-occupied property also, can I claim it as for housing loan? Can I claim it? So, as per the Act, there is this HRA has been provided only for the if an employee, if in that particular location, they can able to claim it. So, if I'm staying it for a work purpose, I'm staying in that location, then I can claim it. Uh, and they will be having a own house also in the same city itself. So in that case, what is the best practices that everyone will follow is it will differ from the company to company. They will have a kilometer wise restrictions. For example, in Bangalore and all, the traffics are the traffics is too high, right? So from my home to reach office, it will take 2 or 3 hours. So many of the people, what they will do is they will take it out. They will locate to a house which is nearer to the office premises. So in that case, they will have a kilometer restrictions based upon the kilometer. They will approve both. So if it is very nearer, if the self-occupied property and rented property which I'm staying, if it is both are nearer, then we can't able to claim the both the exemptions. So this is a question that we would receive it from the client many times. This is one of the question, and if you have any other questions, please raise your hands. I'm happy to answer. If you have any questions also, please post it in the chat box. We are happy to help you. And this is a session that we want to have an interaction with all of your clients. And this will be happen on every month. If you have any doubts or specific to payroll or taxation or compliance related any doubts also, please put it in the chat box. Um, just Srini have raised the question. I think Divya, can you unmute him?
Yes. Hi, Srini.
Hi, Padmajyoti. I'm sorry. You mentioned
Yeah.
about claiming HRA as well as house property in the same city. So the
Yes.
best practice is, proximity of kilometers between the office and residence.
Yeah.
Right? So
Yes.
what is the right, proximity as per law?
In law, it has been not mentioned in anywhere, Srini. Okay. So there is no, in the law, it has not been mentioned. Law doesn't say anything about if it is in the same city, can I claim or not. It's an interpretation that the best practices that everyone follows. So in Bangalore, what most people are thinking about, in Bangalore, they will have a 20 kilometers around. So that is how certain companies are following. And certain companies will have a restriction about 30 kilometers also. So we have to look on that traveling in which location your company have been situated. From that, how much time it would take. So based on that only, the limitations have been derived.
Okay. So when there is no something is not been interpreted in the law, right? So based on our best practices, if we opt or if you allow employees to claim both self-occupied as well as HRA, now, don't you think it is going to be an over benefit, and in the future, the employer will be at the higher risk of receiving the notices? In that
Um,
scenarios, what could be the least risk of the employer by providing the benefits, or can we deny HRA, either restrict to the self-occupied property or only to claim HRA?
so to claim HRA or self-occupied property, denying the approval, right? That we have to take a consent from the employee because they might have think HRA would give more benefit than the self-occupied property. They will go for it. So that decision that we have to take in consent from the employee. And with respect to the questions which will be raised by the department, we can tell them that this is a basic limitations that we are having, because in the act it has been mentioned as in the city. They haven't mentioned about within this kilometers and all. But as a best practices, everyone are following. Approximately in Bangalore, it is having a 30 kilometers and like that. And other places, we are having a 50 kilometers restrictions of the traveling time. So we can explain that to the department people. They will also understand of that. I think Srini, if I have answered your question.
Yeah, so partially I got your answer. What is that it says to be? Can an employee claim the partial within the financial year, partially for self-occupied and partially for housing self-occupied?
Yeah, that is possible, because for example, if I am shifting to my own house, I'm taking possession of own house in the middle of the year, then I can claim both.
Within the same year.
Yeah, if I'm taking a position, for example, if employer have a certificate that I'm taking a position in the month of October, from October I can take it. For that, I can take a self-occupied interest on housing loan, and for the month of April to September, I can take a HRA exemptions.
Okay. In case
And
of any variation in the applicable TDS, what we're supposed to recover, right? For example, self-occupied property, there it has got a limitation, all right? As well as the area as well, up to the 50% or 40% of the employee's basic salary is been entitled to HRA, right? So if employees opting for between the financial year, within the financial year with the two different benefits, right, by occupying switching over from self-occupied to HRA, or maybe HRA to self-occupied property visa also, right? So when there is a shortfall of TDS, right, or if it is not been recovered, so how that situation can be managed? Do you suggest any best practice where employer has got a least impact or maybe least risk on it?
Okay, so what we will do is, I will explain you. When there is a shift in the mid of the financial year, based from the April to December, we will calculate the taxes based upon the income tax declaration provided by the employee. Okay, so in that, if he mentioned for 6 months, if I'm taking care of HRA, and for remaining, I am going to consider as a self-occupied property, we will consider that, and we will calculate the taxes accordingly. And from the January onwards, we will get an actual proof, right? Based upon the proof, whatever that he submitted, we will recalculate it. In that time, if we have any queries or the date has been, there is a mismatch in the dates also, we will reach out to an employee and get it clarified. And we will ensure all the taxes has been adjusted within March. Within March, we will adjust all the taxes and we will deduct it appropriately. Thank you, Srini. If anyone have any other questions with respect to this, or apart from, not from the TDS, not from the points that we have discussed today, apart from the points discussed today, if you have any other questions also, please kindly ask us. So we will discuss on that actually. And there is another question. Please just tell us more on new tax regime. So in the new tax regime, the employees can, by default, then the start of the financial year, it will be reset to a new tax regime, and the employee has to choose if they want to go for old tax regime. They have to submit. In new tax regime, there are certain benefits, limited benefits are only available. For example, the standard deduction of 75,000, which is available, and the employer contribution towards the NPS scheme, which is also applicable. And if we are providing a leave encashment or gratuity, any one time, the debt cum retirement benefits, for that also employee can take a exemption under section of 10. These are the major these are the exemptions that individual can avail for from the salary income. Okay, so in the other exemptions of housing loan, HRA, and investments under the public provident fund, medical insurance, those kind of things will not be available in the new tax regime. So these exemptions are applicable in the old regime. But the major benefit between the new tax regime and old tax regime is, here in the new tax regime, up to 12 lakhs, if my taxable income is up to 12 lakhs, I don't need to pay any kind of taxes. So there is a basic exemption of 12 lakhs. And also, if you see here, the tax rates are very less while compared to the old tax regime. Because here we are having a 5% of scale of increase. So we will have a very lesser tax rates when compared to the old regime. So for certain people, it will be benefited. And for certain people, old tax regime would be benefited. So it has to be calculated for an employee. If you want to say which regime would be benefited, it's based upon their income, not only the salary income, the other sources of income, whatever the individual is having. We have to consider all that income, and they have to calculate their taxes with the help of calculators, which is available in the tool. They can calculate and they can identify which would be benefited for me. So that is how they have to choose the regime. And for regime change in mid of the financial year, it is not applicable. The employees cannot change in mid of the financial year. In April month, they have to choose the regime, and they have to once they declared, it will be considered automatically. So, and when we see about the employees percentage who are choosing the new regime, right? This time it is 85 and 85 percentage people are choosing new tax regime. Only 15 percentage have been chosen for the old tax regime, because in the new tax regime up to 12 lakhs there is no tax. So most of the people are comes under the slab. At least 40 percentage of people are comes under that slab. And since the tax rates are higher, if people doesn't have any investments or loans, for them this new tax regime is better. Srini, if you need any other information with respect to new tax regime. Actually, we are not providing that option. Employee can change the tax regime in submitting the proofs, because from the start of the financial year, based upon the declaration and the regime, we are calculating the taxes, right? So if suddenly if employee is changing the tax regime, then the tax projection will be different, and sometimes it will go for the decreasing in the tax deductions. So in future in department, they will ask why the tax payments are not consistent from your company. So we are not allowing any employees to choose that. And in the Income Tax Act also, it has been clearly mentioned in start of the financial year, employee has to declare declare which regime they are going to choose for this financial year. So we are not allowing anyone to do it in mid of in while submitting the proofs. Thank you, Sri. If anyone have any other questions apart from this. So I also want to discuss one thing with respect to the LOP reversal, which has to be considered for the PF like thing. So as a best practices, what industry's best practice everyone are following is LOP reversal. When it has been reversed in that particular month, it is been considered as a wages, and PF are deducted. PF are deducting for that month, and it is get remitted to the PF department. But in the EPFO Act, it has been mentioned. For example, if the wages are belongs to October month, it has to be paid in the October month itself. It has to be considered for the October month payment. So when in this case, what we have to do is we have to make as a arrear PF payment, and because of arrear PF payment, it will have an impact on the interest, and damages also has to be beared by the employer. So as per Act, it has to be considered as a PF arrear. We should not add it in the current month salary and deducted as and deduct PF accordingly. It should not be followed actually. So to avoid these kind of situations, we would request to have a better control over the leave policies that you are having. So if there are, it should not, if we are having more number of employees applying for LOP reversal, then it would be lead to a penalties and damages and all. So if you don't have any other questions, I think we can close up a session. I would request everyone to follow. Divya, can you post our YouTube links and LinkedIn page link on all in the chat box, so that please follow that. If there are any updates, it will be intimated via those social platforms. I would request everyone to follow our pages, and we will update you about the dates about the upcoming month slot, upcoming month sessions. Keep stay tuned. Thank you, everyone. Thank you for your participation. Thank you for your time.